America is waiting for a major economic update that could affect millions of people. The latest US inflation report is set to arrive on August 12th, and investors, businesses, and ordinary Americans will be watching closely. Why does this report matter so much? Because inflation plays a major role in determining what the Federal Reserve does with interest rates. If consumer prices are rising faster than expected, the Federal Reserve could have less reason to cut interest rates quickly. That could keep borrowing costs higher for mortgages, car loans, credit cards, and businesses. But if inflation comes in lower than expected, the situation could change. A weaker inflation reading could strengthen expectations that the Federal Reserve may have more room to lower interest rates in the future. That could influence financial markets and potentially provide some relief for borrowers. There is another important question. Are Americans actually feeling prices come down? Even when inflation slows, it does not necessarily mean prices are falling. It simply means prices may be increasing more slowly than before. For many households, the cost of housing, food, transportation, and everyday essentials remains a major concern. That is why tomorrow's CPI report could become one of the most important economic stories of the week. If inflation comes in hotter than expected, markets could react quickly, and expectations for future Fed policy could change. But if inflation shows signs of cooling, investors may see it as a positive signal for the US economy. The big question now is simple. Will America's latest inflation data give the Federal Reserve a reason to cut rates or a reason to wait? The answer could have consequences far beyond Wall Street. Stay tuned, because once the numbers are released, we'll know much more about where the US economy could be heading next.